Let's talk through the currency market. Stephen Gallo joins me from Schneider. Hi, Stephen. Good morning.
Mark. Morning to you.
I mean, euro down 7 days in 8, fell yesterday. You're the currency man, Stephen. I mean, how have the currency markets taken on board that EU announcement yesterday?
Yeah, well, just look at the declines in the euro, Mark. You know, as far as the EMU bulls are concerned, myself included there, you know, that is people who believe in the longer term goals that Europe is trying to achieve through the single currency. There are no happy faces this morning, no happy faces this week at all. You couldn't really imagine a worse scenario for the euro. We're looking at the euro now hitting around 10-year lows against the Australian dollar, against the Scandies, the Scandinavian currencies. It does look like the euro could go a lot further to the downside. It's just an assault, Mark. It's an assault on the euro. Now, what I would say, as far as the EU politicians are concerned, EU officials, this is not really waffling on their part. They don't really want to hand out free money to Greece because they know ultimately that what these countries need is a better fiscal trajectory over the longer term. They need these countries, just like Ireland last year, to make the cuts. Now, where the markets come in, it's just the markets do not believe that any of these politicians have the political will to make these tough changes on a time when the economies are suffering immensely.
Does that mean, Stephen, that even if, say, on Monday at the EU finance ministers meeting, if they pledge money, if there are concrete measures, still the euro's going to fall because, as you say, there's no faith in politicians? They
could pledge €1 trillion tomorrow, Mark, over the weekend, whenever, and I don't think it will matter because it's a short-term fix. And, you know, ultimately, this is no different than when we had the national currencies in place. In order to defend those pegs, which the market saw as unsustainable, countries had to take tough measures. They had to, rather than commit to devaluing their currencies and adopting, you know, loose policies, they had to revalue or keep their policies austere. And the markets didn't believe that they would be willing to do that. And it's the same situation now, but obviously only on the fiscal side. So you couldn't imagine a worse scenario for the euro at the moment.
What could turn things around for the euro, Stephen? Let's hypothesize.
Yeah.
Give me a hypothesis. That's what I want.
You know, the hypothesis for the in-house view for Schneider Foreign Exchange is that a lot of these currencies within the OECD space, now there are some shining stars out there, but a lot of these currencies in the OECD space are going to suffer from the same problems. This is not just a European scenario. Eventually, the fiscal crises, the fiscal situations, they're going to come to haunt a lot of key currencies out there. So, you know, I wouldn't say from the perspective of, you know, positive growth differentials, there's anything positive for the euro, short to even medium term necessarily. But, you know, there are severe risks, I think, that are going to confront sterling over the medium term, severe risks that potentially could confront the dollar over the medium term. So, you know, that.
So sterling's little bit of a respite since the back end of last year, especially against the euro. It's not going to last.
Well, we don't think so. I mean, unless there are some big changes over here in the United. You know what I've always said. I've said, you know, if aside from the initial response, negative response you'd get in the financial markets to a AAA ratings downgrade for the United Kingdom, if the United Kingdom were to lose its AAA rating, you would see Alistair Darling cutting that deficit quicker than you could say Alistair Darling. So, you know, that would actually improve my medium to longer term outlook. It's just I don't think that they're going to make any big changes.
We've had some GDP data, of course, Stephen. Got to chat about that. No growth in Germany. French growth stronger than forecast. Does that change your assessment of those two nations at all?
Not really. I mean, you know, it's really going to be tough going, especially for an export-dependent economy like Germany. You know, the Eurozone as a whole, I don't think that, you know, German consumption is going to be able to benefit other countries anytime soon. You know, a pickup in German consumption, that is. You know, in terms of the weak data we got out this morning, it just really increases, you know, the plight of the euro. Is not a good scenario. And what I could see potentially happening here is if we start to, you know, if we continue to get some buoyant data from the United States, that, you know, that divergence trade between U.S. And Europe could pick up quite rapidly and benefit the dollar in the short term.
Final question, Stephen, in 20 seconds, 10 seconds even. Give us a trade. What's your favorite cross trade right now?
Well, at the moment, we're looking at for more declines in euro SEK. I think that it's possible we could test 935 to 940 in that pair in the next week or so.
Stephen, thanks a lot. Have a good weekend.